Hi, this is Editor's Take. I'm Sakshi Batra and with me is Kshitij Anand. He's the Markets Editor at Moneycontrol, and here's wishing you all from both of us and from the entire team of Moneycontrol a very, very happy Dussehra. And on this occasion, we thought, why not we also have a look back at the last 1 year to really understand how has the last 1 year been for equity markets, how have they performed, and also to share with you an outlook going forward as well. Thanks a lot, Kshitij, for joining in. Well, so tell me, the last 1 year for equity markets, how has it been? Has it been a victory of good over evil or not?
Absolutely. Sakshi, if we look back and, witness the historical monument, Vijay Dashmi or Dussehra is celebrated to mark the victory of, good over evil.
Right.
For equity investors, it was the bears, the bulls, which were able to take control of bears. In fact, they were able to beat bears in the last 1 year. Talking specifically about, the index returns, we could say that it was not major. I mean, we haven't delivered, or equity markets haven't delivered a double-digit return with respect to index levels. But, if you look at individual stocks, they have definitely given double-digit return. So, talking specifically about Sensex and Nifty, Sensex is up around about 8% while Nifty gave returns around about 7% in the last 1 year, or from Dussehra to Dussehra. What we could say is that, at least they were able to, or equity markets were able to beat, the FD returns, at least in the last 1 year.
Yeah.
Now, let's talk about the good thing. The stocks which really created wealth for investors, or at least they were able to more than double investors' wealth in the last 1 year. Around about 3 odd stocks in the S&P BSE 500 index were able to actually give returns which are more than 100%. The first one, the first stock that we have on the list is Interglobe Aviation. Now, why Interglobe? In fact, after the fall of Jet Airways, most of the market share, or most of the smart money, moved from that stock to Interglobe Aviation. And why not? It has the maximum, share in terms of traffic at this point in time. So definitely, it is the top contender in the aviation space. Absolutely. And definitely falling crude oil prices also lend a helping hand for the aviation stock. So the first stock, which rose more than 100% is Interglobe Aviation. And the next is from, small and medium finance enterprises, that is Credit Access Grameen as well as Awas Financiers. In fact, if we talk specifically about Sensex companies, then 13 companies gave double-digit returns in the last 1 year, which includes top names like Bajaj Auto, Infosys, RIL, HDFC Bank, as well as Bajaj Finance. In terms of Nifty, more than 20 stocks were able to give a double-digit kind of a return, specifically Bajaj Finance and BPCL, which rose more than 80% from a year-on-year basis. Now, in fact, if you talk about investors' wealth, actually, although individual stocks might have outperformed benchmark indices by quite a margin, but investors' wealth rose just around about 4 lakh crores in the last 1 year. So that we can say it's not that much with respect to the rally that we have seen. Apart from that, we've talked about the good thing in the last 1 year, that is wealth creators. Now we'll have to also talk about the wealth destroyers as well. Now, more than 50% of the stocks in the S&P 500 index. Now, as we know, 500 index, or the S&P 500 index, is India's top 500 companies. Now, more than 50% of the stocks in that space, that is more than 300 stocks, have actually given a negative return in the last 1 year. That is, a small cause of worry for investors at this point in time, which includes, names like Wokhard, Rain Industries, Sterlite Technologies, Suzlon Energy, Reliance Capital, as well as Reliance Communication. In fact, in the Nifty 50 index as well, 18 stocks fell around about 10 to 80%, which includes names like Vedanta, Tata Motors, Z Entertainment, Tata Steel, JSW Steel, and Yes Bank. Most of the stocks in the Nifty 50 index, if you look at Sakshi, they are already going through their own individual problems or structural problems at this point in time, such as Tata Motors as well as Vedanta. So definitely, the fall in the Nifty 50 stocks is more to do with the external environment at this point in time. I think overall, the outlook still remains bullish.
Absolutely. So the outlook remains bullish, and so far it has been a good year from last Dussehra to this year, if you talk about the benchmark indices and also the top stocks. But just the pain point remains in the BSE 500 index. Let's also focus a little bit on the sectors that have performed in the last 1 year. So which are the sectors that have been winners? Which are the sectors that have been losers in the last 1 year?
Well, Sakshi, I think the sectors which have really, to control, or which were controlled by bulls in the last 1 year, were consumer sectors. In fact, consumer durable sector rose around about 38% in the last 1 year, followed by realty index, a rally of around about 19%. Private banks as well as energy sector was up around about 10 to 12%. Now, coming to sectors which sort of destroyed investors' wealth was metal sector. In fact, it is down more than 30%. Now, metal sector is usually driven by what happens across the globe. So definitely is experiencing a slowdown in the global economy as well as trade war woes, which has actually impacted the metal sector in more than one way. You could say that. Apart from that, auto sector is down about 16%. Definitely, we are witnessing slowdown in sales, as well as there's a technology shift, BS6 vehicles coming in. So definitely that has impacted the auto sector in the last 1 year.
Absolutely.
Apart from that, healthcare sector is down around about 16%. It is weighed down by US FDA concerns, and that is something which is now showing in the individual stocks as well. Apart from that, infrastructure or BSE infra is down about 16%, followed by telecom index, which is down around about 5%. Coming to the broader market, in fact, it has also underperformed the benchmark indices in the last 1 year. In fact, small cap index is down around about 10% while the mid cap index is down around about 3%. But remember, both BSE, small cap index and the mid cap index is down more than, in fact, in double digits from their respective 52 weeks highs at this point in time. So definitely that is something which we have to look at it. Apart from that, if we talk about the institutional activity in the last 1 year, FIs have been mostly net buyers in Indian markets. In fact, they were net buyers in 8 out of last 12 months. In fact, they pulled out money, poured in around about 5,000 crores in March 2019, but they poured around about 4,000 crores in October 2018. And if you look at the DI activity, even though FIs were net sellers in 2 or 3 months, DIs or the kept on pouring money into Indian markets. They were net buyers for more than 10 out of last 12 session, or the 12 months, you could say that. So definitely the maximum money came in around about at 14,000 crores in March 2019. And in April 2019, they poured in more than 4,000 crores. This is a net investment that we're talking about, and not a standalone investment.
Right. So 8 or 10 out of the 12 last months, we've actually seen institutional activity and institutional investors that have been pouring in money in the equity markets as well. And that has been supporting the kind of growth that we have seen in the last 1 year as well. But you also pointed out rightly that, right now we are seeing an economic slowdown, which is not just domestic, but global in nature. We are seeing the trade wars and also the kind of slowdown that we have seen, not just in consumer durables and also in the auto sales in the last couple of months. So that has been a big pain factor. But apart from that, the government has also been taking a lot of steps. So what, in the wake of all this, we've also seen a whole lot of volatility in the last 1 or 2 months as well. So looking at all these factors, what is the outlook going forward, and how should investors be prepared for the next coming few months?
Right. In fact, Sakshi, if we talked, about this 2 months back, there's a lot of gloom and doom at this point in time. But given the fact that government has been really proactive in introducing measures to really support the economy, such as corporate tax rate or reduction in corporate tax rate, rollback of quite a lot of tax reforms on FIs as well as HNIs. Apart from that, package for the auto as well as real estate sector will come in handy. Now that government has introduced those measures, but it will not be a 1 month period that these reforms will get showed in the economy, or at least in the private capex. It will take some time. And yes, fears of slowdown is not just you could say that is not just relevant for the Indian economy, but global economy is also going through a similar phase, and that's why it has it is impacting the Indian economy and the Indian equity markets as well. Now, given the fact that we've already, government has already introduced a lot of reforms. In fact, the RBI in its latest policy meeting has also acknowledged the fact that it will take more than 2 or 3 quarters at this point in time for all these reforms to really kick in and show with respect to whether it's IIP data or whether it's manufacturing index or whether it's inflation. So all these things will take time. They have reduced the growth forecast from 6.9% to 6.1%. That is 80 basis point kind of a decline, which has really unnerved investor community at this point in time. But going forward, I think if we talk about equity markets or analysts in the equity markets, they're very upbeat on the fact that all these measures should start reflecting in beyond, let's say by March 2020.
Yeah.
And if you look at the predictions that most of the equity markets participants or equity market analysts are predicting at this point in time, they see more than 12,000 level on the Nifty by March 2020. That comes from the Nomura. Apart from that, we have conducted a poll recently on Sensex and Nifty, and most analysts feel that Sensex should hover in the range of above 40,000 levels, 40 to 41,000 levels by March 20, or you could say the budget 2020. Apart from that, Nifty should also hover between 12,500 and 13,000 range. So definitely at this point in time, the the sentiment is upbeat, and there's a higher possibility that we should be able to go through the slowdown and hit higher levels by let's say by budget 2020 at this point in time.
Absolutely. Thanks a lot then, Kshitij, for sharing with us all those insights. Well, the outlook right now looks quite positive when you talk about the benchmark indices, Nifty and the Sensex. Even the Moneycontrol poll suggests that they are likely to go higher and hit fresh records by Diwali, and also reach a much higher by budget 2020 as well. The slowdown blues we will be able to beat with the kind of measures taken by the government as well. So the outlook remains positive. And for now, here's wishing once again a very happy Dussehra to all our viewers of Moneycontrol. Thanks for watching.
Thank you.